welcome into a brand new episode of WSI TV. Enjoy the show. Hi guys, welcome back to WSI TV. Today we are doing another episode of Jim's Market Update. So of course I am joined by Jim Sampson. How are you doing today?
Good. Thank you for having me. Welcome back.
Thank you for being here. So today we do have quite a few headlines that we're going to be talking about. Unfortunately, some are kind of a little bit sad. Today we are of course looking at Kobe Bryant, and his daughter was unfortunately killed in a helicopter crash yesterday. So we are sending our condolences to his family and everyone involved. And we also have, of course, the news coming out of China. The coronavirus has spread to, the death toll is now at 80 people. So we're looking at how that's affecting the stock market. Actually, we saw this, both stocks and oil took quite a hit last week on that news, and bonds have surged. So we've got the market behind us right now. Right. If you want to go ahead and talk about that for us.
Yeah, so that aside, if we just look at the big picture here, we had our proprietary system gave a brand new bull market signal September the 9th, and it really just went up and away from there. As you know, over the last few weeks, I've been, voicing my concern about the fact that it wasn't, having these kind of more of a bouncy but healthy correction thing, and it's just up and away. Yes. So, and I think, as I mentioned last week as well, it didn't need much of an excuse to call off. No, not to discount any of the news that could be blamed on it, but this really needed to happen anyway. And even now, I mean, you're seeing buying come back already in this morning. It's not exactly by any means, disastrous or even healthy yet. It's not even healthy. I mean, I want to see it come back down to, close around to its moving average like we see back here, to even get back into a healthy country. So but yes, anything that's going to be doing with obviously China right now, and the commodity like copper, for example, commodities that are related to the real manufacturing powerhouse that China is, there's going to be a domino effect, which is going to be very much depending on how this story unfolds, for sure, in coming weeks. I mean, right now it's contained, but count on the fact that if we hear about one of these cases in New York City or something like that, well then we're going to go from there. I think the main thing is for now is to just look at what we're seeing, going by that, because right now the market doesn't seem to be that concerned with the problem. For sure, yeah. So we are actually looking into how that's going to impact earnings seasons as well. So we do have, of course, the concern that the general market is kind of taken a little dip, but not in the extent that people are saying that it has. Right, of course. But so we do have huge names reporting earnings this week, including Apple. We've got Tesla, we've got Amazon, and then of course we have quite a few oil companies, including Chevron and Exxon. So those companies are reporting their earnings, so whether they beat or don't beat those earnings, we're looking at how this is going to impact. Yeah, I mean, the important thing to remember here is that this is a sort of rearward-looking event, and so any news that we're hearing of today is not going to be, featured in these numbers. In fact, if anything, it's going to be it's a very interesting gauge of the strength of both the market, but also an individual stock. If they come out with bad news, or if they are adversely affected by, anything that's happening in the world right now. If their earnings disappoint, then how does the market react to it? Typically, if they get really whacked hard, with some kind of disappointment, then that's a weak sign. But conversely, it'd be interesting to see how many of these companies, if they do report anything bad, that what happens to their stock price. It'd be a reflection of what appears to be a very strong bull market. If even if there is bad news, that they go up anyway, or nothing really happens to them. But conversely, it's also how is this brand new bull market a red herring or not? Earnings can tell us, because if they come out with good news and the stock goes down, then that's also a weak sign. For sure, yes. And you did mention manufacturing, so I just want to touch on that very quickly. The city that the coronavirus is believed to have originated in China has been locked down amongst many others to try and contain it. But so there's concerns with that, seeing as it's such a huge economic hub and there are so many factory facilities that are being Right.
They're halting production currently. So we did see on that news the bond index behind us surge. We saw a 3% increase just over the weekend.
Right.
In the last
gold is holding strong
for sure
as well. Yeah.
Yes, which is really interesting to see, because while you and I are sitting here thinking this is not as huge news as people are making it out to be, we saw this crazy increase just in this weekly chart here.
Yes. Yeah, absolutely. I mean, you can see that bonds, which are seen as a sign of safety. This is basically, I'm going to give my money to the U.S. government for a period of time because I need that element of safety. And typically, they do the opposite to what stocks are doing. Lots of portfolio managers have this balance between bonds and stocks, so they're always kind of covered to the upside and both to the downside. What's interesting, lately, is that that bonds and stocks, and this is one of the anomalies of the markets we're seeing today, is that are both rising up aggressively in tandem. This is a very, very strong chart for something that is really, frankly, boring. It's supposed to be a lousy risk, lower risk but lower reward.
Yes.
Not been the case so far for U.S. bonds.
Yes.
In fact, this was a perfect, a very aggressive upwards trend, and it's bounced off that today. So, and it also happens to make sense with some of the news we're seeing. But really, also what we're seeing there is just an upwards trajectory, upwards trend carrying on.
For sure.
Yes.
Yeah, and like I said, we are looking at certain blue chip companies that are reporting. I just wanted to spotlight Tesla behind us. I was speaking with Jordan Bishop earlier, but just about how this crazy rise, it's not really supported at any point right now, but we're expecting a lot from them just in terms of their fundamentals. They've got so many different things going on with SpaceX and Solar City. But this company is reporting this week, and they do have their new factory in China that had just opened. So we're going to see if that throws a wrench in them.
Right. Interesting to see. That doesn't appear to be doing much to it today, now in today's news. This kind of reminds me, Taylor, of when, going back in time when Tesla just first kind of took off.
Exactly.
It was that initial meteoric rise that everyone wishes they'd got in on. What we also see here is that this is a very heavily backed rise. We see the volume here down the bottom here. This means the big institutions are backing this thing. And they clearly, that's a huge rise in such a short space of time. And this isn't the sort of chart I would want to get on right now.
No,
it's got very ahead of itself, and we want to see more of a trend established, and its moving averages here catch it up, quite frankly. So it's very impressive, and it's easy to get sucked into these situations right now. And not to say it's not going to go up any higher, but that's definitely a kind of, for me anyway. I certainly don't want to short it, but that's a nervous in terms of an entry point. You've got to think of, if I get in right now and I'm wrong, how much will I lose? Or when will I get out? And that's always the big question. And that's why a chart like that right now is, it scares me away.
A little bit, yeah. So this one, it's kind of an interesting dichotomy that the technical indicators for this chart aren't super strong right now, but this company and Elon Musk as an innovator has the potential to build the next Amazon.
Yes.
Just with the diversification and things like that, and just his capability to, again, have this supported rise that we saw over the past couple of months.
It's been a disruptor to the motor industry right from the start. And, during the growth, the reason we have this sort of leveling off here, well, one, it got very ahead of itself very quickly, again, like now. But also because of it, he had funding worries, expansion worries, couldn't meet all the orders, which is a nice problem to have, of course, but cash flow can bad cash flow can kill a company.
For sure.
So, it looks like it's through the worst of that, and continuing on, like you said, there's a lot of synergies that kind of play into each other. And I know, for example, like the Model 3, I think it is the economical Tesla.
Yes.
I believe lead times on those around it's like 3 or 4 weeks or something now. Even I don't know, maybe I'm wrong with that, but I know it's not a long time.
Yes.
Whereas before the worry was like the Model X. When I bought a Model X, and that was 1 to 2 years.
Wow.
And then even then there was lots of worries about when you'd get it, if you'd get it or not.
Yes.
It was. If you did get one, where you're going to get stuck with one because Tesla might have gone out of business.
Yeah.
Who's going to service the car? So it was a thrill ride, but hopefully it stabilizes now.
Yes. We're going to keep our eye on that one. But right now we are just going to highlight. We kind of look into some big names for the sectors that we're tracking, especially seeing as what's happened in the past week. Up top here, I have ExxonMobil, and then we have Apple at the bottom, just too big in oil and tech. So what are you seeing in these charts right now?
So if I'm looking at the charts right away, I mean, Exxon is such a heavily analyzed stock, and what you see there is just this big sideways grinding that really doesn't appeal to me at all from a trading point of view. The best you could hope there is, getting by the bottom in one of these bounces, but it's really not the sort of the chaotic chart like that. We really wouldn't trade. Conversely, here we see Apple, which is really moving in tandem with the overall market here, pretty much mirroring it actually, as you can see. We had that end of 2018 drop there, just like the market did, and like the market itself, now it's just up and away.
Exactly.
And like the market, up on a big high pole right now. A bit like Tesla in that, great if you're in right down here.
Yeah.
Not the sort of chart I'd want to get into, at this point, but that's not to say, well, hey, if you've got that stock, come and sell it and enjoy the ride.
Yes.
Where we're at right now, I wouldn't get sucked into Apple. But I'm looking forward to, in a lot of these stocks, Taylor, is when we do get some, proper correction by the market, hopefully, and not too violent, but a good old clear out.
Yes.
And then we're going to see things like this come back down into a trend closer to their moving averages, their long-term moving averages, which allow us an entry point. And then I'm going to get excited. So I'm still very much, waiting, and for lots of reasons for that, good, healthy correction, good shakeout that we need to see still.
Yes, so we are holding out for that really good entry point in the future. But just touching on a little bit more in the news, we do have the Federal Reserve does have a meeting this week. We're not really looking too closely into that, except that they're expected to hold interest rates where they're at.
Right.
The United Kingdom is scheduled to leave the EU as of Friday. And then we just have that the bonds in the 10-year treasuries have declined over the weekend.
Right. So the more demand there is for the bonds, the less the interest rates, things like that. I mean, I'm obviously British origin, so I have family in the UK, and so I know I've been sort of sharing that whole trauma of in or out with Brexit. And I think at this point, people in the UK, they just want it over and done with.
Yes.
And if anything, all the delaying has made more people switch to the exit camp, and that's what we're saying now. They just want to get it behind them, and get on with it. And all the worries about, nobody's going to trade with the UK now are just, nonsense. And there's people lining up to trade with the UK. It's one of the largest economies in the world still. And the interest rate with the Fed meeting is very, very important, because it's always about expectations versus what actually happens. So if they're expected to hold interest rates, anything other than that will set. And it could be either way, because if you lower them, then what are they worried about? Or if they raise them, then the market won't like that either. So that, as long as it stays as expected, then I don't expect much of market reaction. So it'll be interesting to see what happens there. But it could be another thing, a surprise there could give that market a further shakeout that it actually needs.
So could that, if there's an upset at the Fed meeting, do you think that could trigger the healthy correction you're looking for?
Yeah, I mean, certainly. I think certainly if they raised, the market doesn't like that. I'm not expecting, in an election year though, I just don't think that would be realistic. And that's a safe bet actually. If there was a way to trade that, they're no way going to raise rates. If they lowered, the market could take it the wrong way and think they're worried, they're nervous about something, particularly in the backdrop of all the kind of shaky news we're hearing right now. But I'm expecting them to do as that and just hold right there. They don't want to upset any apple carts right now, and not in an election year.
Awesome. Well, thank you so much for all your insights. We really appreciate everything that you brought for us today. So unless you have anything else to add, I think
no, that's great. Thanks for having me.
Well, thank you guys. We will see you
time
on our next episode, and thank you for joining us.
Thanks for watching the latest episode of WSI TV. Be sure to visit WSITV.com, where you can subscribe for free with no contract and gain instant access to the secrets of self-made millionaires via the WSI TV Vault. So go ahead and claim this gift for free now at WSITV.com.